great lumberjack story. The two lumberjacks going to the woods every day, and one's just chopping trees and chopping trees and chopping trees, and the other one disappears for a little while and then comes back, but he always just chopped more trees than the one who never stops. And so this goes on and on and on, and then they finally get together, and he goes, "Hey, I don't understand it. I work way harder than you do, yet you cut down way more trees than me. What is the difference?" And the only difference is a system. And he says, "I spend time sharpening my axe every day, and I found that this rhythm of when I do it creates a system that allows me to more efficiently cut down more trees than you with less energy, because the tools I'm using allow me to execute the goal that I have." Most of the tools that we've been given freely to manage our money makes it easy for a reason. And that reason is not for us. It's to keep swinging a dull axe and wondering why you're not.
There's a difference between price and cost. What we were walking through is, in one of the scenarios we were testing out, was the price of college may be $60,000 a year for 4 years. That is $240,000. But that $240,000 is the price. What it's actually going to cost you is millions of dollars in retirement or lost wealth to your family because you didn't do anything to get it back.
Welcome to the Cashflow Legendz podcast with your hosts Nate, Brandon, and Brock. Remember, our insights are not direct financial advice, so consult with your financial team before making any decisions based on the topics discussed in this show.
Welcome back to Cashflow Legendz. Nate, Brock, and I are stoked to be here. It feels a little abnormal. I feel like we've been a little out of sync because we've all had summertime going on and travel and camp and a little bit of sickness and all that good stuff. So I'm glad to see both of y'all's faces on the screen, and looking forward to seeing you guys all together in person sooner than later, which segues me into Brock and where he's been lately in his trips. Brock, show what's on your shirt. I think, okay, so that says Currents.
It does.
So Currents is something that I'm going to let Brock tell you about, and then we'll kind of go through. Brock just got back from a conference. What was the name of the conference? Was it just the Currents Conference, the Currents Summit, or?
It was Income Under Management.
Income Under Management. Not assets?
Not assets.
Okay. Income under management. All right. So Nate, Brock, and I all use Currents in our life and our business and our relationships at some level or another. But as we were visiting before we hit record, thank goodness, before we hit record, we were calling Brock out because we like to banter back and forth. And last night we had texted each other, and he was giving us crap about not coming to more events. And so I couldn't wait to get on this morning. This is just an example of what accountability is and how beneficial it can be. Is anytime you come in feeling like you got ammunition, if you're with real brothers in Christ who are not scared to push back, often it becomes about a place that you can improve in more than what you were going to tell them. So we're talking to Brock about the conference and what all happens, and he literally lays out a challenge to where Nate and I, it's obviously been on both of our hearts, where he's like, you guys need to come to more events. Now, anybody listening that's never gone to an event for growth or connection or relationships or ideas, that sounds weird. I'm just like, if I'd have listened to that 10 years ago, I'd been like, what? So, Brock, when you went to the Currents Income Under Management event, you have taken notes and you've been digesting those notes. If you were to frame it at a 30,000 foot view of what Currents is and why it's so important to understand it for the newbie, first time ever listening, where would you start?
I would first start with the fact that all wealth is created through free cash flow. Free cash flow is what's the difference between what comes into your world and what leaves your world and never comes back. That's what creates free cash flow, and your free cash flow is what creates wealth. Well, most people in our world today believe that they have a savings problem, or they have a problem with saving for retirement, or they have a problem with debt, or whatever it may be. But the reality is those are not the problem. Those are symptoms of the actual problem at hand. The problem at hand that creates everything else is your cash flow structure. And what I mean by cash flow structure is how do you handle your cash flow, your income, as it comes into your world? Are you fighting an uphill battle every time that you get paid? Or is your default set at success? And for you to remove yourself from that, you have to opt out of success. And so the way that we do that is through the use of current, which is a technology that was created a long time ago, probably 20 years ago, and we've continued to release it as a technology and an app to be used by other people with their advisor. And what it does is it helps you, in my view, give you three key components to how to handle your cash flow, which are, number one, how do you separate your income from your expenses? Number two, how do you automate the movements in your life? And then three, how do you have something that gives you timely data? You could do all this on your own. You could set this cash flow structure up on your own using a high yield savings account or something else. But the reality is, without currents, you don't get the advisor, somebody like me or Nate or Brandon, that's in your corner helping you do what you want to do the most. You don't get timely data that tells you exactly where you're at financially.
Brock, talk a little bit about expand on a little bit. I want to touch on two things that I think are very important.
Mm-hmm.
The accountability piece,
mm-hmm.
because that catches people off guard sometimes. And I think we have to go a layer deeper.
Yep.
And go, how's it been going with what you've been doing? Has it been getting you where you want to go?
Mm-hmm.
So we have to really be open to the idea of
mm-hmm.
inviting someone else in, which is why we don't take lightly
mm-hmm.
the privilege we have to have tough conversations.
Yeah.
And then also talk about where traditional thinking may merge in this. And I've got a specific thought. I was watching a conversation on a study the other day that they've proven over and over again that when people have a buffer of money between unexpected events, they have more peace of mind and they make better decisions.
Yeah.
Just period, point blank. Money just happens to be the tool they use.
Mm-hmm.
So talk about how currents touches on that and the accountability piece and kind of what you've seen and what we know about current so far.
Absolutely. So first, I'll talk about, the peace of mind aspect. What's funny is when I talk to younger people or families who aren't really high income or don't have a ton of wealth, their whole thought process is I don't need to save. I need to put my money to work, blah, blah, blah. But yet when I talk to the wealthiest families out there, guys making $1, $2, $3, $10 million a year, they are totally comfortable with staying in cash because that cash creates a peace of mind for them to be able to go all in other places. And so what I often ask people is, when was the last time, tell me what it felt like to have 6 months of expenses saved up? Or tell me what it feels like to have 6 figures in the bank. Tell me what it feels like to have 3 months of expenses in the bank. And the most common answer I get is, I don't know. I haven't had that. And so in my head, I'm like, okay, then in what world can you tell me that you shouldn't have it, that you know better? Well, I know what that feels like. But I can tell you, I can take more risk. I can be more fruitful. I can go do the things that I want to do because I know that I have a buffer in place that says if I have a cash flow crunch, if something unexpected comes out of nowhere, I can handle it. And yet my lifestyle still continue the way that it is because we have emergency funds or peace of mind funds for 3 reasons. Number one, so our lifestyle doesn't get interrupted. Number two, so we don't interrupt our investments. Because when we take money out of our investments, it doesn't just cost us today, it costs us in the long run. Because the real impact of accumulating wealth happens later. And then third, it keeps us out of bad debt. Good savers in our world aren't riddled by bad debt. Good savers in our world have more opportunity to create wealth other places.
It reminds me of a thought, Nate. One of our buddies, Tyler Tott, that's very well known on X now, and great mindset, been successful with money and discipline, was talking about taxes recently on one of his Facebook posts, and how he thought that, it was a conversation about what if everybody paid an equal tax and all these things. And it was a great conversation. But what dawned on me is I thought about currents. And I thought about if we'd focus less on trying to get these people at the top in the political positions to tax us this way or that way, and we would just teach people at the you and me level how to keep more of the money that comes into their life systematically, there would be less stressed about what's really going on with the tax code and what's happening with taxes. It wouldn't even be a conversation.
1,000%.
I would say that right there, Brock, is one of the beautiful pieces about leaning into currents, is the more peace of mind I have in-house for the things that matter to us the most, the more I can focus on growing and expanding in the things that matter to us the most, and I don't get caught up in the noise.
That's right. But let's break it down a little bit. If you start your Saturday morning and you have this massive to-do list, your headspace is pretty full, and you can't really think of all the other things that you want to think about because you're thinking about the things at hand. But if you get one thing completed, two things completed, 4, 6, 8 things completed, what you find is now that it's done, you have more headspace to think about other things, to create, to have better conversations, because your mind's not so cluttered with all these other things. Well, the same is true when you have money in the bank and you're no longer having to think subconsciously or unconsciously about what happens if this happens, what happens if that happens. Like, you've cleared that thing from your plate, so you're no longer questioning and using the brain power and burning the calories and the glucose on the fact that this thing isn't lingering in the background. So
perfect. Oh, go ahead.
You can go ahead. I was going to answer that second question from Brandon.
Oh, okay. Well, that's a perfect segue or a reminder of a conversation I had yesterday where a guy that I've been connected to for a long time, been really excited about IBC, but he keeps telling himself that he just can't, he doesn't think he can do it. And so, we've known each other since 2019, but just reconnected recently this past week. And I said, how do you know you can't do it? Like, have you ever actually run the numbers? And he's like, no, I just keep feeling like I can't do it. And I said, okay, well, so I introduced him to currents, and I said, this is something you can implement right away. And this is going to tell you whether you can do it or not. And he's like, man, thank you so much. Like, he got really fired up and excited about it. It doesn't matter what your income level is. The reality is, anyone who's ever been successful with money will tell you, you pay yourself first, you don't pay yourself last. And like you said with currents, and what we know is currents automates your savings. It's where you're paying yourself first, and you're not even having to think about paying yourself first.
Yeah. And so we're going to come back to that. I'm going to address something that you just said about the fact of automating savings here in a little bit. But to answer your question, Brandon, about the accountability piece, a lot of people in today's world really don't like accountability because it kind of rubs you the wrong way. But there is a positive accountability that you can have. And we as humans realize that we have human error to our world. And if there is nobody there to nudge you or to help direct you and keep guiding you on the right path, you will easily veer off, because one of the things that has been ingrained in my mind is there are no habits in our life. There's no there are habits, but there's no timetable on when it's created or when it's destroyed. You are either strengthening a habit or you're getting away from a habit. So you're lessening it. Well, within currents, so if you don't use currents, let's say you set it up on your own, right? You figure out how to do this thing with your bank and blah, blah, blah. You're still on a financial treadmill, whether you realize it or not, because nobody's standing there with you, holding your hand along the way. And so when you need to go back and take some money from your savings because you overspent, because there was no guardrails there, nobody's there to, hey, you shouldn't do that. With currents, with our system, what happens is you get little nudges along the way of saying, hey, you're about to deviate from your spending baseline. Are you okay with that? Are you cool if we let your advisor know? Because this is taking you off path of your wealth building plan. With those tiny little nudges, there's no impact. There's no like, hey, you're in trouble, blah. It's just, hey, here's a nudge. Are you sure you want to do that? Or the fact of, hey, I'm going to go buy this thing. Okay, well, if you want to transfer money from one bank to another, it's going to take a day, maybe 2 if it's on the weekend.
Little friction.
Little friction. And we talk about that in Atomic Habits all the time. Right now in our world, all the friction points, if you're not on currents in like this cash flow structure, all of your friction points are on saving money. There are no friction points on spending. You can literally, and it happens to me all the time. I got home last night and there was coffee on my front porch because it got me. You're on Instagram. You see this thing, you click on it, you add it to the cart, you go to the checkout. Well, it recognizes your phone number. It recognizes through, I think the company's called Link. Oh, you've been here before. Let me just go ahead and fill out all your data. Done. You didn't have to fill out the forms. You didn't have to do anything. All you got to do is click and pay. It's done. There is no friction point. Everything in our world right now is meant to take money away from you. Whereas if you want to save money, you got to open your phone. You got to open your bank app. You got to then look at your accounts to see where money's at. You got to do a mental calculation. You got to then click the transfer button. Then you got to pick the account again. And then you got to pick the account that you're going to transfer it to. Then you got to type in the amount that you're transferring. And then if you want to, you would then also add a memo for that. Okay. Well, then now you can finally hit transfer the money to my savings. Well, me spending money, maybe 2 steps. Me saving money, that was like 10 to 12 steps of just constantly friction point after friction point after friction point of, hey, how do I save my money? How do I do a good thing for my life?
When spending's so easy. Go ahead, Nate.
Well, I was just going to say, I know we have other advisors who listen to the show. And so from an advisor standpoint, one thing that I will say that we've really enjoyed and we've seen a lot of value in is getting more closely connected to our members, to where in a lot of situations, you meet with people and you ask them how long or how often do you meet with your advisor? And they usually say once a year, oh, we'll do an annual review. I mean, that's pretty common in most cases, but being able to go back every 3 months and check in with someone, because man, life changes a lot. Life can change a lot in a month. And so being able to go back to that person, because there's going to be a lot of situations where life's going to change and they may not think to reach out to you. They may not think to say, hey, maybe they can help me with this. Especially as men, we try to figure out on our own. We take that on and we're like, I'll figure it out. But the value of reconnecting and keeping members close to the fire and us staying close to one another, man, there's nothing like it. It has transformed our business.
And to be completely transparent, Nate, I don't even think we've scratched the surface of what we can do to bring. I know, bro. I was saying it before he said it because it takes time to prioritize changing. And that right there proves Brock and Nate's point of if it takes time to do something, it's probably going to be worth it in the end. But if it's easy, it's probably going to be hard later. It reminds me of that great lumberjack story of the 2 lumberjacks going to the woods every day. And one's just chopping trees and chopping trees and chopping trees. And the other one disappears for a little while and then comes back. But he always just chopped more trees than the one who never stops. And so this goes on and on and on. And then they finally get together and he goes, hey, I don't understand it. I work way harder than you do. Yet you cut down way more trees than me. What is the difference? And the only difference is a system And he says, I spend time sharpening my axe every day. And I found that this rhythm of when I do it creates a system that allows me to more efficiently cut down more trees than you with less energy, because the tools I'm using allow me to execute the goal that I have. Most of the tools that we've been given freely to manage our money makes it easy for a reason. And that reason is not for us. It's to keep swinging a dull axe and wondering why you're not getting anywhere.
That's right.
While the energy is getting transferred to somebody who knows how to treat it better and benefit from it. And that's what I love about Currents. When I heard Bob Castellone tell the story of Currents, actually it was Dave Mozica, which you can touch on who that is, Brock, just a sec. I was fascinated by the thought. He said it this way roughly. He said, Currents was not created as technology for the world to catch up to. He said Currents was technology that caught up to the LEAP model, that basically was created off the LEAP model, that's been around for a long time and been very sound and foundational. So touch on that a little bit and who those guys are.
So Dave Mozica and Bob Castellone.
Yeah, and how that ties to LEAP and Currents and just,
Bob Castellone was the one who created the LEAP system, and the LEAP model, he created that 50 years ago, a little over 50 years ago. And what's cool is he created that over 50 years ago, yet the model hasn't changed at all.
Yep.
Which shows that time-tested principles stand the test of time. And
no, go ahead, Brock.
He's been doing that for 50 plus years.
Yeah.
Right? And he's still kicking it. He played golf last year at 80 years old, and he played one off the tips with me and my dad at 80 years old and did amazing, which was really cool to experience. So Dave Mozica is the one who created Currents, and he got it from an idea from Bob Castellone, which Dave and Bob were together at one point, and after a class one day, Bob was walking out of the room, and he told Dave as he was walking out, he said, "Hey, Dave, it'd be a whole lot better if everybody just put all their income in their WCA account, which stands for Wealth Coordination Account, and then move money from there to go spend." And that is where Currents was born, and the idea was born. And when Dave started it, it was all manual. It was all, let's get this paperwork signed in this clearinghouse and this and that. And then finally what happened over time was, hey, let's create this into a technology and then an app and then client facing, and then let's take it to market. And it has really profoundly impacted the financial community.
When somebody hears about Currents for the first time in our world, a lot of times they want to know, what is it really? Is it fair to say, because you're definitely around this conversation way more than us, that Currents is a mindset and creating strategy and behavior and systems around the mindset of how money flows? Behind the scenes, it's still a bank. Is that fair to say?
Yeah, absolutely. It's still a bank. We use a bank, just like all of the banks out there. It's something that is called embedded finance, and that can be a story for another day because that is a massive rabbit hole. But that is Currents is the thought process, the structure, the actualization of creating financial freedom. And in the background, we have the software and the systems and structures to allow for that to happen in our real world today.
I heard Dave say this, and I really liked it because it connects with what you just said. Currents is the daily operating system to how we think about becoming your own banker in infinite banking.
That's right.
So in infinite banking, we have a product that we combine a process with and a mindset with. With Currents, we have a product we're using that we're combining a mindset of currents and money flow and how to control it. So for everybody listening, I want you to stop and think about this question that Brock asked earlier, because I think it's very important for all of us. It's important for me. Like, just if we're being completely transparent, there's times I have 6 months saved and there's times I'm at 1 month, and I know which one I like better, and it ain't even close. So if you think about what it would feel like a year from now or 6 months from now or a year and a half from now to say you had 3 to 6 months of living expenses and you didn't have to reduce your lifestyle, but you could keep living the way you're living, what kind of feeling does that bring on? And this is the thing I love about what we do, guys. how we feel and how the habits we have related to our money make us feel do matter.
1,000%. That it is directly correlated.
Yes. Yet the entire world typically pushes the opposite. Feel stressed out while you get a high rate of return that you can't touch for 30 years. That is not logical. If you remove rates of return and you just gave scenarios, people would pick the peace of mind scenario almost all the time. You may have that 1%er out there that just loves to jump off rocks and out of airplanes and just risk the limits all the time. And that's okay. But the reality is most people thrive when they have more peace of mind.
That's right.
And that goes all the way back to
everybody does. Our
Yes.
brains are meant to survive or thrive.
Yes.
And so we cannot be in the middle of one or two. Like you are either in one or the other. You are either in survival mode, which you're tense, you're constantly burning calories, you're constantly burning glucose within your brain, and you're constantly searching for threats and obstacles and things that are bad within your world, or you are thriving, which means you're always looking for opportunity, abundance. You're not worried about what might happen if you know that it's taken care of. You can create within the space.
And let's touch on that. This is relevant to a conversation. So Nate, I didn't even tell you this, but 2 of our members had 6 of our other members over after one of our events to just kind of Q&A with them. They're all in different stages of how they're implementing infinite banking and currents and those things. And what the ones who are further ahead in their implementation said is that currents is going to go a long ways to helping them get the confidence that they don't have to live in scarcity. But they still have to do the work. The energy still has to be burned. So to your great point, Brock, it's happening one way or the other. So I'm burning energy that keeps feeding scarcity or not thriving, or I'm burning energy to create the ability to think about thriving.
That's right.
And so let's take it to a personal level. This relates to life. If we're in a season of life, let's take a grandparent and they've got 1.5 years of living expenses buffered, not even counting investments and other things in their retirement portfolio or IBC or anything. And they love their grandkids and they live 3 states away. Do you think they're going to go see their grandkids more or have them in more than if they had no buffer and they were trying to live off their investments, if they had it?
You know it.
Yeah. So we've got to get over this mind. I'm getting on a soapbox. We got to get over this mindset of rate of return is everything. When control of capital and being in cash creates peace of mind to allow us to live life on purpose for the things that matter to us the most.
That's right. But we're also not saying as being in cash to just hoard all your cash and be done. If you look at economics, if everybody in America was to hoard their money and not do a single thing with it, the entire economy would collapse.
Yep.
We are meant to move our money, but what you need to know is what is your buffer zone? What I often talk about a lot is freedom without safeguards is only temporary in every walk of life, right? Well, if we know what our safeguard is, our buffer is within our personal savings, anything above that we can then go use for opportunity the right way. What most people do is they create opportunity, but then they leave the opportunity over there instead of bringing it back over, which we talk a lot about, which is cash flow engines. Everybody has financial gravity pulling on all their paychecks. And their thought process is, hey, if I can save 10% and I could just chase a 10% rate of return and I'll get it for 30 years, I'll be okay in 30 years. The reality is you don't know if you're going to make it 30 years. But your life would be a whole lot better if instead of just leaving that money over there chasing the 10% for the next 30 years, what if you were able to just get back 5% of that back into your world?
For the next 30 years.
Over the next 30 years.
Year by year.
Yeah.
That's a great point. And it'd probably be worthwhile at some point, maybe even next episode that we record, to show all the things pulling on our income through one of the the models that we use or y'all use in currents, to visually see when you do that. Most of us are living life so fast that we don't even realize we're 4th, 5th, 6th in line for the dollar we earned.
That's right.
We don't realize we're working half the year for the government often.
Yep.
When you say those things, that unnerves people who've never had that discussion before. What do you mean I'm working half the year for the government? There you go.
You know why they
That's-
call it Independence Day?
Absolutely. All right. So let's touch on 2-day. It was a 2-day event, income under management.
That's right.
Lots of different speakers and mindsets related to keeping more of what you earn, all tied to LEAP, and which LEAP stands for, anybody listening for the first time, Lifetime Economic Acceleration Process. Does your money get stronger as your life goes on without dips and all these things? Can it continue to grow for you foundationally? So what was maybe something you heard from one of the speakers or one of your favorite key takeaways? Because I think you said before we recorded that you've been reviewing your notes and writing down key takeaways. What was one or two that was really important to you?
I've already kind of said quite a few of them, but
Okay.
the reality of all wealth is created from free cash flow. All of it. Whether you realize it or not, all of it is. And some people will say, well, I get, if I get an inheritance, well, number one, your parents didn't have that, or your aunt and uncle who gave you the inheritance didn't have that if it wasn't for free cash flow. Number two is you don't get to keep that inheritance if you're spending all of it and creating free cash flow. Another thing that was talked a lot about is there's a difference between price and cost. What we were walking through is, in one of the scenarios we were testing out, was the price of college may be $60,000 a year for 4 years. That is
$140,000.
$240,000. But that $240,000 is the price. What it's actually going to cost you is millions of dollars in retirement or lost wealth to your family because you didn't do anything to get it back within your life.
So let's touch on that for just a second. We'll tidy up here because that's a good thought. It's not only what college cost or what the price was, but it's what are you going to do with the thing once you finish it?
That's right.
Because if I know I can pay that price and I'm confident as best we can be that I'm going to put things in motion that are going to fight back on the cost over our lifetime, then okay. And in my world, I just had this discussion recently. It's one version of a cost benefit analysis, but you got to be willing to go a couple layers deep to really do a cost benefit analysis. You can't stop at, oh, I've got my degree. It costs $240,000 over 4 years and it's from this university. And I'm doing what everybody does because we're not really getting into what the cost is.
Yep.
Which,
So,
this reminds me, just a side note, if you have more than $40,000 in student loan debt and you want help with that, reach out to us because we have a team that can help you with some of those things.
Just clarification, that has to be private loans.
private loans. Yep. Has to be a private loan. A federal loan, excuse me.
Federal
loan.
Sorry.
Federal loan. We said that wrong. Federal loan.
Federal
If it's
loan.
a private loan, it can't be
it's
part of the equation.
Correct.
Yeah.
So
these are just tax strategies that people can take advantage of. So anyways.
So
one thing that I wanted to say, because I got the opportunity to hear part of Chris Smith's speech, and something that he said that has been resonating with me ever since I heard it was actually a quote from Bruce Lee. And he said, you don't punch the target, you punch through the target. And so much of what we've been talking about today is really living intentional, but also having intentional actions for what our money is going to be doing when it shows up. And I think it's very relevant to the conversation.
Yeah. I would add a couple more things. So number one is, we get questions all the time from business owners of, oh, this won't work for me. I've got revenues that aren't consistent, blah, blah, blah. Well, you know what is consistent? Their lifestyle. If you have variable income, the way that you level it out is you create a system, a structure that levels out your expenses. How often, what's the longest amount of months you've gone without income? Okay, Well, that right there is the exact amount of money that you need to have in your reservoir at all times. Because if you go that long without the income, your world's not messed up. You don't have the scarcity mindset as you usually do, because no matter what happens over the next 6 months, if that's the case, your bills are going to continue to get paid over and over and over again.
Brock, y'all know I love analogy. So I'm thinking, like, where does this all come from? Let's even go back before money was a thing. Let's say that your campsite where you lived, the most important thing that you could have was a fire going all the time at night. And you always had enough firewood to go the amount of time that you've been without it before, that you never want to go back to because of all the chaos. Because when you aren't thriving, then the next thing that happens leads to the next thing. And this is how negative things compound quickly.
That's right.
Because there's no fire at night. Now there's an animal in our campsite trying to eat us. Now somebody got bit. Now there's somebody bleeding. Now we've got an injury to recover from. That's the same way with money.
That's right.
And you probably figured out you need to sharpen your axe to be more efficient with building up that, supply of firewood.
That's exactly right. Which are all things relevant to how we think about how we think.
Yep. Yep. I'm going to touch on this real quick as we wrap up.
Okay.
Nate, you talked about automation. So when we talk about automating our savings, what most people get wrong is they think, oh, well, I could just automate moving my savings from my checking to my savings account. But what they leave off is the fact of different opportunities that come in their world that don't pick up for that. You get paid 26 times a year. Well, you run your life off a monthly schedule, but yet there's 2 extra payments because there's only 12 months. 26 is more than double of 12. So you got 2 extra paychecks. You make so much income or that you stop funding into your retirement plans. Those start showing up within your account. You start, you make so much income that you stop paying into Social Security. Well, at some point in the year, you stop paying into Social Security. That's a 6.2 raise in your paycheck. I said percent, right? 6.2% raise on your paycheck.
Yeah.
Right? Well, your automatic transfer of a dollar amount to your bank account doesn't account for that. Unexpected bonuses, unexpected liquidation events. Your automatic movements of money aren't aware of those things. So what you want to do is you want to create this structure, this reservoir system where all income flows into one account first, and then you only remove that of which you live on. Now you're in a zone where you actually do create that space. And then the other thing is like automation. Some people will say, oh yeah, well, I automate 5% of my paycheck to my savings account. Keeping this super simple, if you automate 5% of your paycheck to go to your savings account, 95% of your paycheck goes to your spending account. If you get a 10% raise, what changed? Nothing. Nothing changed because your expenses rose the same rate as your income did. Your savings rose at the same rate. Nothing changed in your world. The wealth is created between your income and your expenses. What you really want to be able to do is level out your expenses and let your income continue to grow over time. Because at the end of the day, a lot of people are going to talk about affordability. Well, affordability is a choice. Doesn't matter about price. It is irregardless of price. It is choice. And your expense line, if you don't get structure around it and you don't handle it correctly, it's going to happen unconsciously and it's going to grow unconsciously.
Yep.
Put the systems and structures and habits in place to allow you to live into the success that you want to have within the future.
Rob, what did you say about the price or cost of things right there? Again, it's irrelevant. Say that again.
Affordability is about choice, not price.
Affordability is about choice, not price. That's a really good place to end. Affordability is about choice, not price. We have the ability to choose, and lots of times life circumstances take something that we thought we didn't need and make it something we can't live without. And we either have a plan for that or we don't. And that's what we're really talking about with currents, is the ability to choose and have the option to do things more effectively as life happens. So I think it'd be good on one of our upcoming episodes to kind of show what that means. I think it'd be a visual, maybe even the next one, so people can see how they connect together. But what we hope you gathered from this today, anybody listening or watching, first of all, thanks for sharing your time with us, is that everything that we do with our money is a system, whether it's benefiting us or not, whether it's getting us to where we want to go or not. Like Brock said so perfectly earlier, we're always moving towards something that we know is good or away from something, that isn't good, even if we're not doing anything. That's still happening. And so the reality is that money's going to flow, and currents is just what we've found and we've experienced to be the best mindset to implement for how money's already moving in our life to let us get to where we want to go. So we catch you on the,
And Brandon, that's not theory. That is reality. The average American savings rate is 4.5%.
There you go.
Our average member on currents savings rate is 28%. This happens.
You said average. You said average.
That's right.
Not actual. So you could have somebody in there at 42%.
That's correct.
I kind of like that average and actual better than some others I hear about.
Yeah, that's a little different than rate of return.
Yeah. Very cool. All right. We hope it's been a blessing to you. Most importantly, we hope we're being good stewards of the information that we get to be involved with. And here's the awesome thing. Anybody listening or watching, this is all accessible to you. All of it. But you have to decide if you want to reach out and be willing to learn something new or add to your learning, or potentially unlearn something that you thought was true that isn't. And that's where normally the hardest choices are made in any walk of life. Till the next time, hope you have a blessed evening, and we'll see you